Yeah, well, thanks for having me on, Tom. That's the key point, really. The market is obviously rallying, but on the surface, you'd be forgiven for thinking that, yes, it's overbought, there's some relatively high returns, but it's really underneath the surface that you're seeing some pretty unprecedented changes. So, you alluded to the gamma there. Gamma is essentially, option dealers' hedging needs. All you really need to know is that when it's very high, they tend to stabilize the market overall. They tend to, they don't chase moves. If the market goes up, they sell, and if the market goes down, they buy. But what was really unusual is for that move to be so rapid. So we went from like near record negative levels only a few weeks ago to almost a near positive level this week, in the fastest rise we've ever seen. And as you said, that's really been ultimately here what we're talking about is speculation in a very few number of semiconductor names, and especially in the option space. And I think that's what's led to this very unusual set of risk measures where they are today.
Well, there is that dreaded word speculation. And for Global Wall Street listening, thank you so much, folks, for your commitment there. I want you to take this to Cambridge in pure and applied mathematics in your core work at the wonderful Imperial College. The derivatives folks, the industry was basically Paul Wilmot at Imperial College years ago, which is where it was founded. Do you see an analog here that we can take back to other crises of the whiplash, the whipsaw that we're seeing day to day in our speculation?
That's good knowledge on Paul Wilmot. Yeah, he was taught by one of my lecturers at Imperial. But the analog, I think, is 2021. So really, not that long ago, of course, but that's the last time we saw things as extreme as they are today, except they were less extreme. So we had this very low correlation, we had very high dispersion, and we had pretty high gamma back then. But really, crucially, the rally kept going for like another 6 to 8 weeks. So I think that's to sort of immediately assume that everything's a bit crazy and speculation is very feverish. That doesn't necessarily mean that the bell is about to toll right away for the rally. It could go on a little bit longer.
Simon, I was going back and forth yesterday with our editor-in-chief, John Micklethwait. And John Micklethwait, he knows his alpha, his beta, his gamma, his delta,
all
his
the Greek letters.
Epsilon. I mean, John has it nailed here on Greek. I want you to explain, Simon, to mere mortals, where they look at the Big Short movie, or maybe they translate Nassim Taleb and Fooled by Randomness. They look at it like it's a derivative shell game. What's the underlying value of the gamma, the correlation and the dispersion where you stopped the world yesterday? What's the underlying value of all this?
I mean, in terms of if it's a value for societal value, obviously that's a very different question. But it ultimately comes down to, I guess, highly efficient markets, and people have very niche risks that they need to hedge away. But as usual, when you start with a real end user demand, we've seen it in commodities, for instance. The oldest futures markets are commodities. They were originally there for end user demand, but very quickly speculators started to use them in different ways, maybe not for how they were originally intended. And I think that's kind of what's happening in markets. But there is some very good things you can do here. So for instance, if you take a view in correlation, it means that you can then express it in the market. Right now, though, the fact that correlation is so low, that's really telling you that the shock risk to the market is high. I mean, correlation cannot actually go much lower for the market. It can really only go one way. And what happens when a shock hits, something exogenous, things tend to move together, and you see that correlation move, and then I think everything will unravel then. You'll see the dispersion move, the gamma will move, and the correlation will move.